Good evening, Slopers. Tim Knight here. And it's March the 2nd on a dusky evening here in Palo Alto. I wanted to talk about some of the subtle changes I see going on. Before we get into that, just let's take a look at the always important ES. And in the background for this whole discussion is the notion of buy the dip, which is the G-rated version of the vernacular. And that is a notion which is understandable. But let's take a look at that over the past 7 months or so. Let's just trace this through to understand the logic and why that logic may be starting to fail. So we have huge dip. It has been so long since I've seen something like that. I forgot what it's like, but this big month-long dip. Rise. So buying this dip made a heck of a lot of sense. Another dip. Meaningful, but not nearly as big. And another long rise. And then a little dip. I guess this was the Egypt dip. Buy the dip, buy the dip. Rise. So time and again, when people are selling and scared, here, it made beautiful sense to buy it because you are always rewarded. And so naturally, you keep kind of doing this behavioral modification in the market, and it kind of takes hold. And so now we have the Libyan dip, bottoming here on the 24th. Buy the dip, buy the dip. And naturally and gratifyingly for the bulls, zoom in here a bit, it rises. It goes up and went way up. And then yesterday morning, that is in the wee hours of March 1st, it was way up here. And you can imagine all the patting of backs and so forth. But then something weird happened. It started falling again. And as we look at this more broadly, we can see that this wedge pattern that I've been watching for a while what was pierced and has been re-pierced, and very interesting, the high on this bar precisely matches like to the penny the underside of that line. So that's a terribly important line. So we'll get back to this point. Let me talk about the subtle changes that I see. There are 5 of them. Number 1, the momentum Gaga stocks have had their halos removed. I've talked about Netflix a number of times. This was like the de facto proof that everything was going to the sky, and this has lost about 1/5 of its value. It doesn't look that big when you look at a chart like this. It's a little more obvious when you do that. But yeah, it's lost about 1/5 of its value. Chipotle, purveyors of overpriced burritos, whose success still bewilders me, likewise has gone in a very short amount of time from 275 down to 242. Now, it's not a collapse, it's not a crash. I mean, the vast majority of owners of this are still wonderfully in the green, but it's still about $40. And this whoosh type momentum seems to have kind of pooped out. And certainly, when you look at something like Salesforce.com CRM, we can see that even on a day like this, it slipped. And it's really, I mean, it peaked way back in December 9th at 151. It's at 128 now. This is a meaningful drop. And these are all the momentum plays. So that's point 1. Point 2 is inflation. Inflation is starting to take hold. And listen, if inflation, this is simple. If inflation starts kicking in spite of the government's attempts to hide it, game over, man. I mean, game over. Interest rates aren't going to be at 0. I mean, Bernanke is screwed, and oh my God, would that be a wonderful pleasure to watch that man get reamed over. Give me my popcorn and my Coke. That would be a show. But look at silver. I mean, silver doesn't look like this if inflation is tame. Or if you don't buy the whole precious metals thing, you want to see what interest rates are doing? Well, look at the interest rates. We saw this rise here. And on a day like today, you look at something like the bonds. The bonds had a bit of a rally, but today they lost over 1.5% on the TLT. That is a very big drop. And these, move inverse to interest rates. So interest rates, aka inflation, starting to bubble forth. What else? The dollar's weakness is not helping the bulls the way it used to. This is the closest thing I've got to a dollar graph. This is UUP, the Dollar Index Bullish Fund. And we're reaching toilet paper levels again. The dollar has been in pretty much a free fall for the year, certainly since January 10. And the Dow went up like 8 points today. It was virtually unchanged. So this plunge in the dollar is huge wind at the backs of the bulls. It ain't helping. It's just really not helping anymore. So that's interesting. The fourth point was already explained, which was the whole notion that buy the dip is starting to get to be a little bit questionable. Because the simple fact is that if this was the high, if we start to make a series of lower highs and lower lows, if the trend has finally, as proof of Jesus Christ and God in heaven, has changed, then the buy the dip thing is going to be just a joke. Last but not least, isn't so much a subtle change as just a cold hard fact, which is, with all due respect to Market Sniper, that the POMO is ending. I know that Dutch and maybe some others think that QE Infinity will go on forever. Let's just agree to disagree on that. As far as the current program, the $600 billion shafting of America, that's ending in June. And as I've said before, if, let's say, it ends on June 15, it doesn't mean the market will go up until June 15 and then start falling on June 16. People know it's ending. The heading for the exits will take place before June 15 or whatever it is. This is musical chairs. People aren't going to wait till the last moment. So, there you have it. As far as my own portfolio, as wild-eyed bearish as I always sound tonight, it's still a blend. I've got 25 long positions. I've got 95 short positions. The longs are nice. I'm not madly in love with any of them. It is a compromise because, we need to stay somewhat balanced in light of potential pushes higher. So they're all reasonably good patterns. I would feel more comfortable with a purely bearish portfolio if we knew for a fact we were in bear mode again, but we don't know that. So got a bit of a blend here. I also have no large positions at all, with the exception of FXE, which is the euro. I'm short this as of today. It's the only large position I've got, and this, even big moves in this market aren't that big, so it's a relatively low risk item because just you're not going to wake up to find this has changed 10%. This is the euro we're talking about. Anyway, well, that's it. I've run out of things to say. So those are my 5 items. And if you've made it this far, for goodness sake, click some ads. Bring me a couple of nickels and dimes for my hard work here. And love you all. Bye.